This is Alan Bush with ADMIS with the daily financial forecast for Thursday, October 15th. In the stock index futures, we are seeing prices higher this morning following better equity prices in China. And it does seem like in the last month or so, China has been the leader as far as global equity markets is concerned. Also, the Chinese equity markets advancing to now an 8-week high. Also, we had several economic reports this morning, most of which came in on the weak side. Also, we had real earnings in the most recent reporting period on a weekly basis, coming in down 0.2%. Also, we have estimates for third quarter corporate earnings likely to be down 7.2%. Now, all of this sounds a bit depressing, and yet stock index futures seem to be holding up very well. I think that any economic headwinds that do come our way will be met with, at least here in the U.S., with a delayed rate increase from the Fed, and globally with central banks around the world, including the European Central Bank, likely to add more economic stimulus. So longer term, we feel that stock index futures will advance, and I think that we will see new historical highs next year in all of the major stock indices. Now, moving over to the foreign currencies, seeing that the euro currency lower, this after a member of the ECB Council indicating that more stimulus is potentially needed to address the deflationary aspects. This helped the dollar index and, of course, put pressure on the euro currency. Our feeling is that the dollar, even though higher today, will probably give back a good portion of the gains. Later today, still thinking longer term that the dollar index is likely to work lower as the Fed refrains from raising rates this year and may have a very difficult time raising interest rates next year. So from here, look for lower in the dollar index today, lower also longer term. Now, moving over to the interest rate markets, we are seeing futures a little bit lower. This primarily due to stock index futures today trading higher, so there's that inverse relationship. I'm inclined to think, though, that longer term we'll see the long end of the curve holding up very well and advancing, especially with the Fed very unlikely to raise interest rates anytime soon. And I think this is a long-term trend. Also, the probability of a rate increase from the Fed at the March 2016 meeting now dropping to only 45%. That compares to yesterday's 54%. So continue to trade the 30-year bonds from the long side. And I think this is a trend that is likely to last for quite some time. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.